Ukrainian border. Earlier this month, the U.S. president warned that Russian aggression would be met with unprecedented economic penalties. Putin denies plans for a military operation. And despite this week's drop in European natural gas prices, the region is still at a critical point with record low inventories and a clear risk of running out of the fuel if the weather turns cold. That's according to Goldman Sachs. The company's head of energy research says the weather forecast suggests temperatures will drop in mid-January, draining supplies. Well, we're about a minute and 40 seconds into your European cash equity trading session, opening up higher today, up about 0.1%. FTSE 100 stocks, however, falling by 0.1%. This is the second day of trading for FTSE equities. We are looking at unchanged S&P 500 futures. Of course, this is off the back of another day of record gains. Still that Santa Claus rally. Again, volumes are very light heading into the new year, so perhaps just some window dressing. Now, we are looking at a stronger dollar. We had strong economic data out of the U.S. yesterday. Retail sales were strong. Euro is weaker then. On the back of that, we're looking for jobless numbers later today. Your U.S. 10-year yield just lower by 1 basis point. That was after some heavy selling yesterday. German 10-year yields also unchanged. Some heavy selling really begun yesterday in the European sovereign bond space. So still holding on to those gains in the bond yield. Now, we've also had a very volatile day for the lira. At one point, it had dropped as much as 5% against the U.S. dollar. It is now fluctuating between gains and losses. This comes after the government reaffirmed its commitment to help save the lira when it comes to lira depositors and stabilize the currency. This is Bloomberg.
When the COVID pandemic brought global travel to a standstill in 2020, the impact on the hotel industry was devastating.
It was like nothing you could have imagined.
It was a shock, was a kick in the butt.
There's very little that didn't change during the pandemic for the global chains.
It's comparable to maybe 5 consecutive 9/11s, what it did to demand.
Marriott, the world's largest hotel chain, saw revenues plummet by 50% in 2020. Another blow came in early 2021 when CEO Arne Sorensen lost his battle with pancreatic cancer. Longtime Marriott executive Tony Capuano succeeded Sorensen, and despite these setbacks, he's optimistic about the future.
Part of my confidence in the ability to lead the company through this crisis is I have the benefit of what I've called a long-tenured, battle-tested team.
A key member of this team is CFO Leeny Oberg.
She really is unflappable in terms of the way in which she handles business challenges.
I think she goes well beyond maybe the, quote, traditional CFO role. She's involved in every aspect of the business.
The openings in Q4 were still right on target. We've even had a couple in Europe net.
Not only is she obviously a wonderful steward of the company's balance sheet, but I rely on her heavily as any leader would as we try to look around the corner.
Part of our job is to make sure, what do customers want? What are they thinking that they want next year and the next year? And that takes investment, and that takes thinking ahead of time of where you want to get.
You could call Leeny Oberg Marriott's Chief Future Officer.
I always loved finance. I did figure out that once I'd worked at a financial services firm, that it was a great experience for a few years, but that I ultimately wanted to join a team for a more long-term way to try to build a business.
Oberg joined Marriott as part of its investor relations group in 1999.
As is often the case for many people, things evolve, the company grows, opportunities show up, and I really was able to build a set of skills and experiences that helped prepare me for the CFO role, not only in corporate level roles, but also operational and international.
She's been Chief Financial Officer since 2016, the year Marriott acquired Starwood Hotels and Resorts and became the largest hotel chain in the world. Although that scale remains an advantage, All the industry's major players are finding it crucial to innovate in the wake of an unprecedented disruption.
That was the wake-up call for rethinking some of the operations and to try to figure out smarter ways to operate.
The large hotel chains are very much still in the mode of figuring out what the consumer is going to look like, what guest demands are, what preferences have changed.
How does Marriott need to reinvent itself in these very uncertain times?
I think a lot of the initiatives that were in place, a lot of the strategy that was in place, even before the pandemic began to unfold, will continue to serve us well. Continued global growth. More than 60% of our pipeline is outside the United States today. I think that will continue to increase as a percentage.
When you think about market share for the company, inside the U.S., we have about a 16% share of the hotel rooms, while outside the U.S., we have 3%. But no doubt, I would expect that we will see greater growth rates of our rooms outside the U.S. than inside the U.S.
Does that mean that you'll be putting more investments overseas as well?
Well, investments is an interesting word, but the capital structure of deals varies a lot by market. So, for example, in some markets in Asia Pacific, there's far less use of debt, while in the U.S. there is much more use of debt to construct a hotel. So the investment needs are often different for an owner outside the U.S. than inside the U.S.
Notice that she refers to owners. That's because Marriott owns a very small percentage of properties that carry its name. The majority are owned and operated by franchisees, while the company operates others under long-term management agreements. This asset-light business model presents the CFO with a unique set of opportunities and challenges.
Because we don't own all of our hotels, we have far less debt. We would never have been able to grow as fast as we've grown and become more attractive to our customers without having the capital from all these hundreds of owners providing capital. The challenges of the model are you're managing a lot of different constituencies. You have to really consider the owner's needs and what's going on in the financing markets. I'd say the biggest challenge is around prioritization, about really picking your spots, going after them quickly with your investment dollars, and then adapting as times change.
And in a time of rapid change, Marriott has made it a priority to invest in technology.
We've worked really hard to improve productivity and to be able to come up with innovation that both is attractive to the customer but also helpful to the owners. The fact that you can now go and have your mobile key and not have to stop by the front desk, and that you can communicate about how you want your pillows, etc., all on your smartphone. That's both great for the customer, that's also great for the hotel. Allows them to plan better, allows them to run it more efficiently. There have been wonderful innovations. We're not done. We got plenty more to go.
I think the key is to really enhance technology, but to realize that technology doesn't replace the face-to-face interaction.
I have to make sure we do things right. After all, it's my name over the door.
We are a people-first business, but how do we utilize technology to enhance the services we can deliver and make those services more efficient? With the cost of wages going up and the cost of doing business increasing every year, we have to figure out how to do more with what we have and how to utilize technology to become better at our craft.
Coming up, Lini Oberg shows me how classic hospitality meets cutting-edge technology at one of Marriott's iconic hotels.
On the digital platform, you can do so much in terms of communicating with your customers. And guess what? It's also economically really efficient to be doing it that way. It's all about engagement.
This is Bloomberg.
Breach the Capitol.
Container ship blocking the Suez Canal.
Types of crypto coins.
Crackdown on tech in China. The billionaire space race.
Delta variant. Chip shortage.
And rising energy prices. The Omicron variant has
Founded in 1927 as a root beer stand in Washington, D.C., Marriott has grown from a tiny family business into the world's largest provider of hotel rooms. As it's added millions of new customers, it's also expanded its customer loyalty programs.
We were the first in the industry to have a loyalty program, so we understand the value and the importance of it.
But in 2020, the public health crisis that ravaged global travel also threatened the consumer engagement these programs had built.
Some of our most loyal customers didn't stay in a hotel for a year, but through our branded credit card programs, through the partnership with Uber that we rolled out, we found other mechanisms to keep connected with our customers, even in a period where they were grounded, not traveling at all.
The partnership with Uber allowed Marriott Bonvoy members to earn points through rides and food orders. The credit card partnerships not only kept Marriott connected with customers, they connected the company with funds at a critical moment.
What Marriott as well as Hilton did, they were in a position to generate cash by pre-selling points to their credit card partners.
That shows just how much the credit cards value the relationship. And you know, if you're willing to make a $1 billion cash advance to a hotel company that was, you know, stock price had dropped by 85%, means you really value the relationship and you trust the partner. You truly trust the partner.
They'll make millions and millions of dollars from the branding of the credit cards. And then additionally with that, the consumers get the points on that. What we're seeing quite a bit this year is a lot of redemption of those points now that the world is opening up again.
We've enabled our customers to have more choices in how to redeem those points. They can redeem them within our hotels. They can redeem them outside of our hotels with the partnerships that we have through experiences, et cetera. But I think it really helps our customers stay within the ecosystem of Marriott.
I got a view of that ecosystem from Lini Oberg when she showed me around the Marriott Marquis in Times Square. Originally opened in 1985, the hotel was recently given a $135 million renovation. We started in the newly remodeled M Club Lounge, a premier amenity for Bonvoy members.
Making our loyalty members, now 157 million strong, making them feel welcome, special, and appreciated for their frequent travel with us really matters.
It feels like you're trying to own the full experience of travel, whether it's through your co-branded cards or your travel insurance. Why is it important to bring your guests into this ecosystem?
It's all about engagement. One of the most important things is looking around the corner. What are the trends that you're seeing in customers, particularly in the digital commerce space? Before, obviously, so many of our reservations were made by the telephone. We now see that well over a third of our reservations are made on our app. And on the digital platform, you can do so much in terms of communicating with your customers. And guess what? It's also economically really efficient to be doing it that way.
The digital future is already in place for Marriott guests, transforming everything from the check-in process to the traditional room key. But even as technology creates efficiencies, there are areas of rising cost on the horizon. After making deep staff cuts in 2020, Marriott needs to rebuild its workforce.
For sure, the most painful part of this entire pandemic was about the furloughs and the layoffs that we had to do. It was necessary to survive, to make sure we got through to the other side.
Now the company not only faces competition for workers in an economy reshaped by the pandemic, it's trying to do this while wages in the industry are rising and when customer and employee expectations are in a state of flux.
One of the real things that sets a hotel apart from a home sharing platform like Airbnb is the services that they offer to guests. So there's an incredible tension as they work through, what those guest expectations are, what their strategic placement in the market is, and what their, labor cost needs actually are.
So I do think they need to leverage technology to reduce the number of unskilled jobs in hotel operation. But they really need to provide jobs that require higher level of skills so that they can reallocate part of their payroll to fewer workers and pay them better.
We have been able to hire 40,000 people since the beginning of the year in 2021. And where you see it is in certain really hot markets. It's where you can see the shortages, but generally overall, it is improving.
Technology may help Marriott meet this challenge as well. The company is rolling out a new labor management system that will more precisely match staffing to customer demand.
This labor management system allows a hotel to much more assign labor just in time. So you're able to say, I see what's coming over the next couple days. I can work the shifts in a way that frankly gives the associates more flexibility, but also makes the staffing levels more appropriate. It used to be prior that it would be more of, okay, I'm going to plan for all of next month. Done. Your work shift, you know what it is. Now there's more flexibility and more adaptability to what's happening in the business of a hotel.
Flexibility and agility will be critical assets for Marriott in the foreseeable future. With leisure travel driving the demand recovery and the forecast for business travel still uncertain, hotel companies are hoping to attract a hybrid customer, adapting their spaces and services to a category known as bleisure.
You're going to be reminding people to say, hey, you know, take your family for the weekend, but maybe stay an extra night. And we have the business center, and we have the guaranteed Wi-Fi and reception that can ensure that you can get business done from perhaps the pool or the beach on come Monday morning.
Where I'm a business traveler, where I likely will choose mobile check-in, mobile key, come up the elevator straight to my room. Then I may go on a family vacation. I want to talk to the front desk clerk and find out about a restaurant that no tourists are aware of.
So now when you look around this hotel and you look, before it would be really easy to tell exactly who was on a business trip and who was here, you know, seeing the city for leisure. Now, much more of a blend. People staying longer over a weekend. That means we need to have space that works for everyone, no matter what the purpose.
For hotels, conventions, big events, drawing big revenue, right? What do you do after the pandemic when perhaps we won't have as many conventions and events as in the past?
Well, I think first of all, we ultimately will. That business is coming back. I think one of the interesting things we're seeing in the group business is that people are not canceling farther out. They're canceling really close in, where there's still some discomfort in traveling, but where there is bookings that they feel comfortable doing in the next few months, those bookings are ramping up. So we've seen group get better and better and better with each quarter of this year, and we're actually really excited about what we see in 2022.
Lini Oberg's job always keeps her on her toes, and when she's not on the job, her favorite pursuits are active as well.
I love to run. Been part of a women's running group for 23 years, and we still run together 3 times a week.
How does that help you in the day-to-day job and the grind that it is to be a CFO of such a big corporation?
You know, it's always been for me a way to clean my head. You know, a lot of people say they run with music. I generally don't run with anything. I really like the time to think, reflect. You've always heard the saying that people get their best ideas when they're out for a run. There's no doubt there's something to that.
Up next, Lini Oberg believes a chief future officer must be a good listener to be a good leader.
I actually find that the listening is where some of the best decisions get made.
And she says some of the best ideas come from a business culture of diversity.
Over 60% of my global finance team are women. Over a third are people of color. It makes us a better company, not only from ideas, but from performance.
This is Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Marriott's investments in the future extend well beyond the doors of its hotels. In February 2021, the Marriott Foundation announced a $20 million endowment to launch the Marriott Sorensen Center for Hospitality Leadership at Howard University. The partnership with a historically black institution aims not just to bring more diversity to the industry, but to give students the tools to rise to the top.
So when we first spoke about this, it was about building a true partnership, really trying to solve for an issue, and that is the lack of underrepresented minorities, especially at the upper echelon of these industries, and that is problematic. And what this is to provide a solution.
I think the positioning of that center is really unique in being one of the first to say publicly, we will not develop entry-level workers. We're going to develop people that you will need to take seriously.
When you look at the travelers around the globe, it's a very diverse group of travelers, and promoting diversity promotes new thought, new ideas. It makes organizations stronger, it makes organizations better.
It requires deliberate focus to drive the sort of diverse workforce that we want. If you look at our C-suite, more than 50% of my direct reports are diverse. If you look at our board, more than 50% of our board composition is diverse.
On the diversity inclusion side, you know, I'm particularly proud in finance. We have over 60% of my global finance team are women. Over a third are people of color. It makes us a better company, not only from ideas, but from performance.
The number of women chief financial officers has been steadily rising over the last decade and a half. A study of nearly 700 companies shows their representation doubling since 2004. Lini Oberg intends to keep the trend towards diversity going as a mentor in all areas of business.
One of my overall beliefs is really important for leaders to be approachable. And so the more that I can talk to anyone in my shop, or frankly, even out of my discipline, about what they're doing and how they're thinking about it, hopefully it's helpful for both them and for the company.
Unflappable, responsible, and approachable. Lini Oberg has the expertise and the people skills to steer Marriott into the future. I asked her what she sees when she looks ahead. What's the opportunity for Marriott in the next 10 years that most excites you?
We are all about being the world's favorite travel company. And there are so many more places for us to grow and so many more ways for us to connect with our consumers. I do think our size and scale gives us a unique opportunity. And when I think about those opportunities, we got to get at them. We got to make sure that we go and take advantage of them. And so a lot of this is about the translation of business strategy and financial resources and putting them together in a way that provides value to all of our constituencies.
What's the challenge for Marriott in the next 10 years that keeps you up at night?
Pace of change. Pace of change. You know, all of us have seen that technology has meant that the pace of change has only accelerated. When I think about when we would start a brand initiative 20 years ago versus when you start it now and how quickly it takes to get it done and rolled out, and what customers expect. They expect things really quickly. All of us, you know, you go on your smartphone, you're like, well, why didn't I get that answer right away? And I think that is one of our biggest challenges, is trying to keep up with the pace of change.
How do you see your role as CFO changing in the next 10 years?
Of course, you've got the standard parts of the CFO role in reporting accurately and with great transparency of our results and our state of health, critically important. But just as important is really helping the company find ways to accelerate growth. For me, it is very much about how to enable the growth that we want to achieve.
What's a skill set or area of expertise that the CFO will need to develop in the next 10 years?
Deep understanding of technology and where technology is going, I think, is number one. I think communication skills, the need for good communication skills is only going to continue to increase. You know, the old days, you had the classic view of the CFO with the green eye shades, kind of sitting and making sure the numbers all got tallied appropriately. I think it's much broader now. And it really is about making sure that all the constituencies understand the strategy and the value that you're trying to deliver.
What's the best advice that you'd give to somebody who got promoted to the CFO level today?
love what you do. It's really important that you love what you do. And then the other one is about listening. You know, as a leader, there's this expectation that perhaps you're going to come out with what everybody should go do and the edict of this is the way we go. I actually find that the listening is where some of the best decisions get made, by listening to team members so that you can say, I want to take part of that point of view and that point of view to get to the best decision and strategy for the company. And that takes really listening.
Leaders who listen are essential to a company that's determined to innovate, especially when its industry is in transition. That ability to lead, combined with a willingness to learn, makes Leeny Oberg a Chief Future Officer. I'm Sherry Ann. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Happy holidays from your Bloomberg family.
From the worker perspective, a recent headline, you got Kellogg's Cereal Union says the latest agreement that they had was rejected. Deere had to finally make a union contract. How concerned are you about the longshoreman contract and union negotiations right now?
Well, we're some time away from that. The contract expires on the 30th of June next year, and both sides have told me that they'll sit down to the table and begin negotiating in May. These are always important discussions, and usually when the spotlight is on our industry. But there'll be some issues around wages. The industry is making a lot of money. The longshore folks would like to see that. Now, I don't speak for either side, but training and development of the workforce will also be key as robotics and automation are front and center. The workers cannot be left behind.
Yeah, but to that point, I mean, do you feel like the balance, though, has shifted? I mean, for so long, workers had a lot less negotiating power. Do you feel like the pendulum's shifting?
The International Longshore and Warehouse Union, which does work across 29 West Coast ports, is very strong and a democratic organization.
This is Bloomberg. I'm Danny Berger in London, and these are your first word headlines from around the world. New global COVID-19 cases have soared 32% in one day to a record 1.73 million. That marks the third day in a row with more than 1 million new infections worldwide. Virus deaths in the U.S. are on the decline even as cases rise. Federal health officials say it may be because Omicron isn't as severe as other strains. The UK government says it has no further plans to reduce the isolation period for people with COVID-19, even as staff absences put growing pressure on the health services and supply chains. Authorities lowered the quarantine requirement in England to 17 days from 10 last week, but leaders are facing calls to go further after the CDC in America shortened its recommendation to just 5 days. Shares in artificial intelligence firm SenseTime have jumped in their Hong Kong trading debut. The company delayed its IPO after being sanctioned by the U.S. Treasury Department this month over suspected involvement in human rights abuses. It vigorously denies those allegations. SenseTime sold 1.5 billion shares in the offering, raising about $740 million US. Well, in 30 minutes into your cash equity trading in Europe, we are seeing gains still under all-time highs. The highest was set back in November. Not there yet. We are looking at gains in S&P 500 futures. Those have continued to hit all-time highs. Euro weaker versus a dollar. We're looking to the jobs data today. Also that Putin-Biden call. U.S. 10-year yields lower by 1.5 basis points after a sell-off yesterday. And in perhaps a bad sign for risk assets, a continued decline for Bitcoin, now falling for its third consecutive day. It's fallen by about 8% over the past 3 days, combined with another loss of 0.6% today. This is Bloomberg.
"60 years ago, a Cold War fired up a space race between the Soviet Union and the United States.
We choose to go to the moon in this decade and do the other things, not because they are easy, but because they are hard."
For decades, national policy and NASA technology drove the U.S. space program. Now, billionaires lead the way.
T-minus 10, 9.
It's a new dawn
And new race
for space.
Liftoff of the Falcon 9 and Crew Dragon. Go NASA, go SpaceX.
Hello, I'm Ed Ludlow.
And I'm Alex Steele. Over the next half hour, we'll explore the multi-billion-dollar 21st century space industry. Private companies are setting their goals higher and reaching them even faster, while governments around the world are pouring resources into research and development, training, and technology. But before we can understand where this is all going, we have to look at how we got here.
7, 6, 5, run for main engine start.
NASA's Space Shuttle program was a shining new phase in America's journey to the stars. The goal? Reusable rockets ferrying astronauts and cargo into orbit for decades.
Roger, Columbia.
At first, it did just that. Launches and landings became routine, and space just another destination, until the Challenger.
Oh my gosh.
The program just couldn't shake safety concerns, and disaster struck again in 2003 when the shuttle Columbia disintegrated upon re-entry, killing everyone aboard.
We had to do our mourning, a very, very, very tough situation. Lots of crying, lots of crying.
When the US shuttle program was shut down in 2011, the government officially portrayed it as a redirection of NASA's focus towards deep space exploration.
I have been pushing NASA to revamp its vision. Now what we need is that next technological breakthrough.
Space is really a hard thing to do. And I think one of the issues we'd had with our stakeholders was NASA wasn't really allowed to fail.
In reality, turning around reusable rockets took a lot of time, and flying into space just cost a lot of money. The U.S. spent $290 billion in today's dollars on the Gemini and Apollo programs that put the first man on the moon. And by the time the shuttle program ended, it was costing the government nearly $1.6 billion per flight.
President, welcome aboard the International Space Station.
The hope, by shifting NASA's focus into deep space, the financial burden of supporting the International Space Station would move to private companies. Cue Elon Musk.
It's an amazing day, I think, for space as a whole, for the space industry.
Even before he founded Tesla, Musk had set his eyes on space. He launched the company SpaceX in 2002 with the idea of reusing rockets to reduce the cost and doing it better.
You can fly and refly an orbit-class booster, which is the most expensive part of the rocket. This is going to be ultimately a huge revolution in spaceflight.
SpaceX, along with Boeing, secured $6.8 billion in NASA contracts to help fly U.S. astronauts into space.
Two heads are better than one. And honestly, getting like 400 of them is even better.
In 2012, Musk's SpaceX launched its Dragon spacecraft, the first commercial vehicle to deliver cargo to and from the International Space Station. And in 2020, Dragon carried a NASA crew to ISS for just $55 million per seat, 20% less than Russia was charging the US for the same service.
And SpaceX isn't alone. Jeff Bezos' Blue Origin was among several companies that received NASA funding to develop spaceflight technology, marking the next giant leap in commercializing space. It's been just 11 years since U.S. Senators Bill Nelson and Kay Bailey Hutchinson passed legislation paving the way for NASA and the private sector to work together on space missions. Nelson now serves as NASA administrator and once flew a mission into space on the shuttle Columbia. He believes a program that has stalled is once again poised to soar.
We're going to see another incredible leap, that going back to the moon in preparation to venture out into the cosmos. Artemis, the vehicle, the SLS, will take our astronauts to lunar orbit. There they will transfer into a commercial vehicle, and that will go down to the surface of the moon. They'll do their activities, come back, and the spacecraft called Orion will return to Earth. So you see a combination of everything, public-private partnership.
In theory, it's a perfect combination. NASA's expertise and experience infused with creativity and capital from big companies and billionaires.
20 years ago, we were worried about our space industry. I'm not worried about that anymore.
Kathy Leaders has worked for NASA for nearly 30 years and now heads its human spaceflight office.
My vision of the future is that NASA's a multiplier. So that's really our goal, is to be the ultimate tech transfer and be able to take our knowledge of human spaceflight and be able to share with them what the nation's invested in us.
A big player in NASA's past, present, and future is Boeing. The aircraft giant has worked with the space agency since helping put Americans on the moon 50 years ago.
NASA will embark on big projects. It's not that they don't do satellites and other things at smaller scale, but they'll embark on moon landings. We have always aspired to be part of those big projects.
Jim Chilton has been at Boeing for 37 years and now leads the company's space and launch division. He says there's room for companies like SpaceX and Blue Origin to complement what Boeing brings to the race for space.
I think their business model is very different than a big publicly traded Boeing. You know, those companies are focused on one mission, and they're taking a very long cycle view of it. It's in the public domain that Mr. Bezos has said, I'll put $1 billion a year into Blue Origin. They're willing to dig in, focus their company somewhat more narrowly than Boeing's portfolio on that, and make it happen.
So now we have big publicly traded companies, entrepreneurs, governments, and investors all eager to get in on the action. Coming up, the money that drives the space race. Where does it come from, and how far can it take us in the industry?
We think the potential is, and pardon the pun, astronomical. And if there's one industry that could rival the internet in terms of how transformative it was and how much value was created and redistributed, space is on that short list of industries.
This is Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to this Bloomberg Special Report Space Race. I'm Alex Steele.
And I'm Ed Ludlow. Investors have poured nearly $200 billion into more than 1,500 space companies over the last 10 years, dwarfing the contracts awarded by NASA and other space agencies.
You might see the first trillionaire be a space-based business or be derived on that.
Morgan Stanley's Adam Jonas, who covers the auto sector, is one of the top analysts tracking the space race. And like everybody else, he is pumped.
I think that it would be very difficult in 10 or 20 years to imagine key businesses and ecosystems without the space backbone.
One thing that helped reignite investor interest in space.
Command and start. 2, 1.
Billionaires traveling to the stars.
On how it felt? Oh my God! My expectations were high and they were dramatically exceeded.
Amazon founder Jeff Bezos traveled aboard Blue Origin's first flight to space on July 20th.
Earth's atmosphere, it's so big, we live in it, and it seems gigantic, but when you get up there, you see that it's actually this teensy little thing that we need to protect. So, I don't know, for me, it was definitely incredible.
It was a key milestone in the company's effort to make space tourism viable and entice super wealthy customers to pay big money for a unique travel experience.
Space tourism is investable, it is sexy, but we think that the main value of space tourism, just in our team's opinion, is where it can go from here.
Bezos is not the only billionaire sending himself into space. On July 11th, Virgin Galactic founder Richard Branson made the journey to the stars. He sees space as a tourist destination, with his space line deploying reusable systems to shuttle customers back and forth to experience just a few minutes of weightlessness. I spoke with Branson just after he completed his flight.
I've always sort of pictured what it was going to be like. I mean, like the ride up there, the ride back. I never realized that the whole experience was going to be so vivid. Woo!
One of the earliest and most active investors was Chad Anderson. His company has tracked the cash flowing in and out of space for years. He believes there's a lot more to come.
Early on, we had some wealthy individuals who were very excited about the potential of space technology and invested their own money, helped kick things off and get things started. The government played a key role early on in being an early funder and an early customer. And then venture capital firms got very excited about the opportunity, not just for rockets and satellites, but from the data that comes from those technologies. And today, we're seeing a lot of retail interest.
Money that once went primarily into rocket companies is being spread around more broadly as space startups join the SPAC wave. Mark Boggett's venture firm Seraphim Capital has been chasing space investments for more than 15 years. He says SPACs have helped accelerate the space race.
Most of these private companies are raising money annually in order to build out their operations. And it takes at least a quarter, if not two, for the management teams to engage with the private investors and to access the capital. So that takes a lot of serious management time off the business, focused on fundraising. So with SPACs, where these companies are raising larger sums of money, $300, $400, $500 million, which are really bringing forward some of their future rounds to now, it's a lot more efficient. So I think we've got many more space SPACs to come during the course of 2021.
Exchange-traded funds, or ETFs, brought another way for investors to tap into space. Over the past 3 years, a handful of space-themed ETFs have launched in North America and Europe that now hold about $800 million between them.
These vehicles are very much focused on the traditional space market because that's where most of the listed companies are. The new space market, the majority of the companies remain private.
The highest profile of that bunch is Cathie Wood and ARC's Space Exploration and Innovation ETF. Since launching in March, the fund has attracted more than $550 million of flows.
That ETF is an interesting one because when they launched it, it had a handful of the defense contractors that you would normally think of, the infrastructure companies that most people associate with space. But their largest holding is Trimble. And Trimble is a distribution company that brought us the first GPS receivers in the 80s.
Outside of the US, the funds are younger and smaller. Products like the Procure Space UCITS ETF in London and the Harvest Space Innovation ETF in Canada have attracted just a few $1 million after launching in the second quarter. And new products are launching every day.
We've recently launched the Seraphim Space Investment Trust on the UK London Stock Exchange. And that's a vehicle that we're targeting 20% per annum return over the longer term.
The bulk of the money is still in companies like SpaceX. A recent funding round raised over $1 billion from investors, including Fidelity Investments and Sequoia Capital. That round valued the company at $74 billion, according to Bloomberg. And it comes as Elon Musk promises to build out the ambitious Starlink network. Think thousands of connected satellites that can do revolutionary things like bring broadband services to millions, track refugees, and fight climate change while spotting storms before they get to catastrophic levels.
We have all these satellites that are orbiting our planet and gathering all this really valuable information. And we are just now beginning to harness that information, distribute that information. We're in a very similar place in geospatial intelligence as we were at the GPS in the late 80s, early 90s. And so we see an equal amount of opportunity here for investors to make returns.
Investors are captivated by Starlink's potential to pay off, but the program will cost a lot of money. The total investment will be between $5 and $10 billion before the company is cash flow positive.
Step number one for Starlink is don't go bankrupt. That is, if we succeed in not going bankrupt, then that'll be great, and we can move on from there.
Musk says $20 to $30 billion could be needed to attain the goal of offering broadband to as much as 5% of the world's population, beyond the reach of conventional networks. The service has more than 69,000 active users and aims to quintuple that over the next year.
We think that the comms message there is much bigger, and the market is potentially much bigger than just providing internet to areas of the earth where there's unreliable or no internet service. That's certainly part of it, and there's a good ESG message there too. But we think by developing these orbits for high bandwidth, low latency communication, that will unlock things like urban air mobility and eVTOL, flying cars.
Blue Origin also has plans to compete in the satellite internet sector. Google, Amazon, and Microsoft have all invested heavily in cloud capabilities beamed in from beyond Earth's atmosphere. Morgan Stanley says it's largely this growth in space-based internet and data services that will drive the space industry to more than $1 trillion by 2040.
That's a fairly conservative 4 or 5% growth rate from the $400 billion space economy we are today. We think we're just scratching the surface. The hard part, Alex, will be not just the direct impact that space has on industry, but the indirect, right? So if you are able to turn on continents and open up more connectivity to not just homes, but vehicles, cars, ships, planes, everything that moves, as a second derivative, you may be opening up multiples of that $1 trillion number that wouldn't have been turned on if it weren't for the space comms. And that's just the comm side. Then you throw in transportation and EO, Earth observation, and we think we're being fairly conservative with that number.
Coming up, from profits to politics, there's more than just money on the line in the race for space.
You know, it's great that we have billionaires that thinks, you know, space is cool and they want to put money into it. It's also important that we continue to recognize that this is a strategic capability for our nation.
This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to Bloomberg's Space Race. I'm Ed Ludlow.
And I'm Alex Steele. The race for space isn't just a battle among billionaires or a contest for investors. It's a competition between countries.
We think that a very important aspect of the space economy, from both the dollars and cents and the TAM, but also from the national security aspect, is what China's doing in space. And they've made it a very big priority to develop their capabilities in space.
Russia and China recognized a decade ago our dependency and advantage in space and have been investing billions of dollars and a great deal of energy in applying their space technology to space warfare. And to be blunt about it, anti-satellite weaponry. We have not done that.
Tori Bruno is the president and CEO of United Launch Alliance, or ULA, a joint venture formed 15 years ago between Boeing and Lockheed Martin to provide launch services for government and commercial customers. Its track record is 140 successful launches and 0 failures.
We've always had this peaceful high ground where we could cooperate in space, we could use space in various ways, and the assets were never under threat. And today, I'm here to tell you that they absolutely are under threat. Russia and China have developed a wide variety of anti-satellite weapons that are in fact already deployed.
Many analysts forecast that the militarization of space will become a major source of growth in the sector as the US expands its budget for defense research and development with the advent of its new Space Force.
I think some military applications in space are somewhat inevitable.
98% of all weapons ordnance, according to our aerospace and defense team, is space dependent. And we think, at least this so far, that this is apolitical. That regardless of the administration, space is seen as existential.
Space is now a warfighting domain. We haven't had a new warfighting domain in 100 years, since World War I, when air was introduced. That's a major sea state change.
In the near term, the moon is critical territory as countries jockey for strategic advantages in space. The next big prize is Mars, but getting there is more challenging.
Mars is a long way off. The moon is only 3 days off. Mars, if you go with conventional propulsion, you're talking about 8-10 months to get there, at least a year to stay on the surface, and then 8 to 10 months coming back. That's a long time.
How do we make sure we can keep our people physically and psychologically well on the journey? There's going to be a lot of learning going through all those aspects of the mission that then gets us ready for this 3-year mission, 3 years going all the way to Mars and then having somebody safely come back. I want to try that out on the moon first before I send people to Mars.
While countries race towards the moon and Mars, it may not be long before the rest of us have our chance to go to space.
Richard Branson's Virgin Galactic recently received full approval from the FAA to take commercial customers to space.
Sold 20.
A seat on Blue Origin's 11-minute New Shepard spaceflight sold at auction for $28 million. And for a fraction of that price, a company called Space Perspective will offer 6-hour rides over the stratosphere in a luxury balloon. Book now for trips starting in 2024. The first space hotel, Voyager Station, is in the planning stages, and passengers might someday arrive there on Boeing's Starliner.
Should people want to maybe have their own capsule in their own livery, like we sell airplanes, we think there's all kinds of business possibilities in the future.
So when we think of space tourism, we think of it in 2 ways. How could it then parlay into transportation? That's where we find there's the most investor interest, and if you're willing to surrender to the long horizon needed to see it through, where they may be the greatest reward. But the other factor of space tourism is the public support, the visibility of live streaming these events and getting the general public behind it and getting our children interested in it.
And then there's Elon Musk's Starship project, which investor Chad Anderson thinks could be a game changer.
This is a vehicle that is fully reusable and is enormous. It can take so much capacity to orbit. It can be refueled in orbit and go into farther destinations. This is the vehicle that's going to take us to the moon, likely before NASA is able to do that.
The Starship can carry 100 metric tons and as many as 100 passengers. It's 160 feet high with a 30-foot diameter.
It's an enormous vehicle, and it's so low cost. I mean, they're talking about a cost of like $5 million per launch. When Starship comes online, I mean, this is an enormous vehicle that you could pay to outfit in whatever way you want, bring up all of your friends and family and do, you know, and have a hotel in space, stay for as long as you want and come back down. Or medical, you know, research institutions, whatever, can outfit it however they want, pay to outfit it and launch it. And it seems like you could do that and still save money based on what we're doing today.
Space is the kind of topic that turns hard-nosed investors into wide-eyed fans. We hope that you enjoyed our exploration of the business of space. Stay tuned to Bloomberg Television and Radio for continuing coverage of the space race. And of course, visit Bloomberg.com for 24/7 news and analysis. I'm Alex Steele.
And I'm Ed Ludlow.
This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Protesters breached the Capitol.
Container ship blocking the Suez Canal. Types of crypto coins.
Crackdown on tech in China.
In the billionaire space race.
Delta variant.
The chip shortage.
And rising energy prices.
The Omicron variant has triggered.
This is Bloomberg. I'm Danny Berger in London, and these are your first word headlines from around the world. New global COVID-19 cases have soared 32% in one day to a record 1.73 million. That marks the third day in a row with more than 1 million new infections worldwide. From tomorrow, people in Paris will be required to wear masks outside. It's an effort to slow surging cases. Greece will also be implementing a host of restrictions on restaurants and bars, and Italy's government is set to ease quarantine rules. That's to keep essential services running. In the UAE, cases have surged above 2,000 for the first time since June. Earlier this month, the daily number had fallen below 50. The Crown Prince of Abu Dhabi is urging residents to comply with all safety measures. Stock indices in Dubai and Abu Dhabi are lower today faring worse than regional peers. A New York jury has found Ghislaine Maxwell guilty of luring and grooming underage girls for sexual abuse by Jeffrey Epstein. The verdict in Manhattan federal court came after about 5 days of deliberations. Maxwell has been convicted on 5 of the 6 charges against her, including sex trafficking of a minor, which carries a possible prison sentence of up to 40 years. And authorities are probing what Emirates has described as a technical incident shortly after one of its aircrafts took off from Dubai last Tuesday. According to the Air Current website, the plane almost hit the ground in a nearby neighborhood, but the flight continued on to its destination of Washington, D.C., where it was cleared to return to Dubai. And we are just about 0.2% away from all-time highs on your European equities. We're about an hour into your cash equity trading, though not all benchmarks are higher. We're looking at UK stocks down just 0.5%. The CAC 40 is higher, DAX is slightly higher, but volume is very low. We're about 42% below the 100-day average. At the same time, we are looking at S&P futures pushing higher after yesterday's all-time highs. It's record after record for U.S. stocks, again, on that lighter volume. Looking across assets, we are seeing some buying in the Treasury market after yesterday's sell-off. We're looking at a 2.5 basis point move lower in the U.S. 10-year yield, followed by a stronger dollar. Dollar is strongest today against the yen in the G10 currency space. That's the worst performing currency, down about 0.2% versus the dollar. But we continue to see volatility in the lira. It's now lower by 3% versus the dollar. An hour ago, it was gains for the lira. However, we've seen losses as steep as 5% so far today. Yesterday, the government recommitting to helping to stabilize the lira. However, that wasn't enough to stem the declines that we've seen every single day so far this week. Another update for you in 30 minutes. This is Bloomberg.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Over the next 30 minutes, we're going to get meta about Meta, the company formerly known as Facebook. First, the story behind the rebrand and the pivot to the metaverse. Our discussion with a longtime Facebook executive, now Meta, on the day of that announcement. Plus, the Facebook files, shocking revelations from whistleblower and former Facebook employee Frances Haugen, who went all the way to Capitol Hill to accuse the company of prioritizing profits over people. And a key early investor in Facebook speaks out. Reid Hoffman tells me he's disappointed in the social network and immediately gets a call from Mark Zuckerberg. All of that coming up, but first, Facebook doubling down on the metaverse, so much so the company now calls itself Meta. We spoke to the vice president of Meta's global business group, who's run Facebook's ad business for years, Nicola Mendelsohn, on the day of the announcement.
We don't see it as a risk, and we're just coming off a company all hands, and the excitement at the company is very real. And Meta really captures where our company's going and also the future that we want to build. But our mission hasn't changed. Meta's focus is all around building the metaverse, but continuing to let people connect, to find communities, to grow businesses in the way that they have with the Facebook family of apps over the almost 20 years that we've been going. And it really reflects and also solves the confusion that I think there has been out there caused by our company name sharing the same name as our biggest app. And as I said, Facebook started as a single app, and now we're a whole family of apps and services with Instagram and WhatsApp and so many others. And Meta actually brings together all of these apps, all of these technologies under one brand new company brand.
The Facebook files, Nicola, have revealed some of the ills of social media that Facebook knew internally, but from the public's perspective, it appears you did not act on. That Instagram was toxic to teens, that less than 5% of hateful content was taken down. Is Facebook taking a longer look in the mirror right now, or running away? Or are you committing to double down and take some accountability for these issues?
What we're seeing right now is a coordinated effort to selectively use leaked documents to paint a false picture of our company, and it really doesn't in any way reflect the company that I know and that I'm passionate about and that I love working about. And I'm actually really proud of our record navigating these complicated trade-offs involved in operating in a services of scale. And I would say, look at the actions that we've taken, look at the considerable investments that we've made. If I just take this year, we're on track to spend more than $5 billion on safety and security. And I think that's more than any other tech company, even if you adjust for scale. And the fact that we now have 40,000 people that are working on safety, that are working on security for the company, I think shows that we're not running away, that we absolutely understand the responsibilities that we have. And against the different areas that you could look at, you can see that the progress that we're making across all these different areas.
But you're 40,000 people serving 3 billion users. So there's this question, is Facebook just too big to govern? There may be so many smart and well-intentioned and capable people who work there, but can you moderate every political, moral, and religious issue in every single country and every language around the world? Or is that just impossible for any one company to do?
So one of the things that we've set out to do is actually set out and be very open and transparent about the work that we're doing in this area. And so that's why we now publish 4 times a year the Community Standards Enforcement Report. And we're even opening our books up to EY as an independent auditor to be able to validate and look at our results. Now, I think this is some of the most comprehensive, most sophisticated work that is going on anywhere around the world. And I'm really proud of that work. And, but to your question, we're not satisfied if there's anything on our platform that could in any way, cause harm to somebody. And so we're committed to continuing to get it down off our platform. We might not be able to get everything down, but we absolutely are committed to do everything we can to make those numbers as small as possible.
Meantime, Facebook's core ad business remains the engine of growth for now. We've seen Facebook and Twitter and Snap take a hit as a result of the Apple ad tracking technology changes. Apple's reporting its earnings results today. They actually missed estimates for fourth quarter revenue. But I'm curious if you have any words for Apple right now as somebody who is so influential in Facebook, or I should say Meta's ad business.
No, we've been warning for a long time about Apple's iOS 14 policy and the fact that really it's been benefiting their own bottom line at the expense of small businesses and at the expense of creators. And I think we're seeing that play out now, especially with small businesses where, they have really small budgets. And for these small budgets to work, they've got to be able to reach the customers that matter to them. And especially over the last year, we've seen how vital it was for small businesses to be able to, if they weren't able to open their shops, to be able to reach out and find the customers that matter to them. And at its heart, we do believe that privacy and advertising can coexist, but without the collateral damage caused by Apple.
There have been questions about Mark Zuckerberg's continuing role at the company, and I'm curious if there's any indication he might step back as CEO, move into a solely chairman role like we saw Larry and Sergey do at Google. And similarly for Sheryl, will she take on a different role or take a step back if the ad business is less important than the metaverse?
Nobody is saying that the ad business is less important at Facebook. It is an important part of how we do business. And I wish you could have seen the all hands that we just came off that both Mark and Sheryl were on, and the excitement that was emanating from not just Mark and Sheryl, but all of our leaders at the company, sharing the vision, exploring it, having fun with all of our employees, and really toasting towards this next vision for the company over the decades ahead.
So as somebody who is so critical in running the global ad business, I'm curious, what is the ad opportunity that you see in the metaverse? How effective do you think ad targeting will be there? And tell us a little bit more about your own experience and what you think advertisers will get out of this.
So I think there's going to be a lot of exciting opportunity for advertisers, but I think first and foremost, there'll be a lot that just happens in the metaverse for free, as there is in the internet today. But there will be advertising opportunities. But the way that we build all of our products, first and foremost, is that we start with people. We start with people and we make sure that, and understand how people are using and enjoying our products, and then we go from there. I think there's going to be opportunities for creators, and we're going to make sure that we're building the tools that both creators and developers need in order to help them be successful in the metaverse as well. So I think there's a lot to be excited about. And we're already seeing businesses, starting to explore what it's like to actually experiment with augmented reality. So I think about the fact that you can go on Instagram today and you can try on virtually a pair of Ray-Ban glasses in the Ray-Ban shop, or Charlotte Tilbury, where you can try makeup on and lipstick. So we're already seeing brands start to have fun with it.
Vice President of Meta's Global Business Group, Nicola Mendelsohn. Coming up, the shocking claims from whistleblower Frances Haugen that Facebook knew Instagram was toxic to teen girls, but didn't take action. And there's more, a lot more. That is next. But first, let's hear from one of Facebook's biggest competitors, the CEO of Google's YouTube, about their approach to protecting children online. This is Bloomberg.
We certainly want to make sure that we are doing what we can to be responsible with kids and in every way possible. And that's one of the reasons that we actually have worked hard to give parents as many options as possible for them to decide what is important for them and their family, whether that's like limiting screen time, like limiting what is the content they actually have access to. I mean, even letting parents just say, these are like the 10 videos. My kid can only see these 10 videos. And so that is really important for us to give the tools back to parents for them to decide what is best for them and their family.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
That it is important for any organization to do what it can to protect people, and particularly children.
That was head of Instagram, Adam Mosseri, in August, defending Instagram's plan to launch a product for kids. But not long after that, Instagram put those plans on ice. This after former Facebook employee turned whistleblower Frances Haugen revealed what have come to be known as the Facebook files, a slew of internal company documents that showed the social media giant knew its products could harm teens' mental health. She testified to this and much more on Capitol Hill.
They can't protect us from the harms that they know exist in their own system, because it is causing teenagers to be exposed to more anorexia content. It is pulling families apart. And in places like Ethiopia, it's literally fanning ethnic violence.
Now, some regulators, like Senator Ed Markey from Massachusetts, are calling for an update to the Children Online Privacy Protection Act, or COPPA. They say they're getting impatient with big tech's inaction. Take a listen to this exchange with executives from Snap, YouTube, and TikTok during a congressional hearing when Senator Markey asked them if they would support an update to COPPA.
You've had a chance to look at the Child Online Privacy Protection update that I've introduced. It's been out there for years. Do you support it or not?
I think, Senator, we'd love to talk to you a bit more about some of the
we've
issues.
Listen, this is just what drives us crazy. We want to talk. We want to talk. We want to talk. This bill's been out there for years, and you still don't have a view on it.
Ariel Fox Johnson, Senior Counsel of Global Policy at the nonprofit Common Sense Media, joined us to talk about the impact of social media on children.
I can't help but agree with Senator Markey. This bill or versions of it have been out for the last decade. Companies have had time to come back with real concerns, and instead all they keep doing is saying, we want to talk, we want privacy legislation, and they won't actually agree to anything. And kids are the ones who are suffering, and teens are the ones who are suffering.
What would this bill actually do, and would it be enough to protect kids online?
This bill would be a huge step forward to protect kids and teenagers online, and that's really critical. Right now, a 13-year-old is treated like a 35-year-old. They don't have any additional protections online in America, except some in California. So this bill would ensure that young teens, 13 to 15-year-olds, are protected. It would flat out ban targeted advertising to children. It would establish a digital marketing bill of rights for teenagers. It would establish a youth marketing and privacy division at the Federal Trade Commission, who's the enforcer for COPPA. And it would ensure that kids and teens are protected on the sites that they're on, and that sites couldn't turn a blind eye and pretend like they didn't have young users, which we know is how many companies operate right now.
And many of these companies make the argument that kids are using technology, whether we like it or not. So someone has to build the experience for them. Who should be building those products? Do you think it's YouTube or Snap or Facebook or Instagram or TikTok, or should these be publicly funded projects or something else?
I think it would be much better if these products and projects were not being done by companies whose business model is profiling children and teens and adults and making money off of advertising and off of data mining. It would be better if we could have support for high quality education where the purpose of the product wasn't to collect as much information as possible or to manipulate teens or children into spending more time online.
Where would that support come from, though? The government? Would that be, publicly funded? Some, philanthropic donors? Should the companies band together and fund it themselves?
I think the companies can be a lot more creative than they're being now. There are ways to create compelling children's products that do not rely on collecting personal information from them or taking advantage of them or psychologically manipulating them. It would also be great if we got additional government funding, though I know government funding is a touchy topic now as always. And it would be great if we could see other philanthropic support step up, but there's so much the companies can do, and they have so much money from what they do to adults, they could do a lot better with kids.
What do you see as the biggest problem with kids and technology today, or problems? There are many.
Yeah, it's hard to have just one problem. We see a lot of interrelated problems. We see kids who are uniquely vulnerable, who are prone to oversharing, who don't understand how data collection works online, and who are uniquely susceptible to advertisements. So they're then put into this environment where they're profiled by companies, they're targeted with, unique ads and messages that are specifically tailored to them and their vulnerabilities. So you're a teen girl wondering about dieting, you're gonna be pushed extreme dieting content. You're a teen boy, maybe you're gonna go down some radicalization rabbit hole because they think that'll make you keep looking longer. There's concerns about popularity and seeing how many of your peers get more likes than you. There's concerns about unrealistic body image, concerns about unwanted spending because they don't realize things are advertisement. There's a whole host of issues and problems that are facing teens and children online these days.
That was Ariel Fox Johnson, Senior Counsel of Global Policy at the nonprofit Common Sense Media. Coming up, we will hear from early Facebook investor and LinkedIn co-founder Reid Hoffman why he's disappointed in Mark Zuckerberg and what Zuckerberg had to say about it. This is Bloomberg.
How fragile is the European energy complex?
The European energy complex has been incredibly fragile for a number of months now, and it just seems to keep getting hit with new crises.
As new revelations kept coming from the Facebook files, one of its earliest investors decided to speak up. Reid Hoffman, also the co-founder of LinkedIn and normally a staunch supporter of all of his portfolio companies, told me this.
Good for her for coming forward. Good for Facebook for doing the research. Bad for not well, you did the research, you discovered some things that were harmful. What are you doing about it? Right? It doesn't matter the fact that you say, well, maybe it's complicated or difficult. It's once you discover something that is really potentially very dangerous and damaging, what we should now hear from the company is, and here's when we saw these reports, here's the stuff we started doing. Here's the way we started making trade-offs against what might otherwise be in our interest, engagement, revenue, whatever, in order to solve these problems. And that's what you want to see from companies in leadership.
So you're disappointed?
I'm disappointed.
Why?
Well, because anything like, it's okay to have done the internal research and not reported it. That's okay, because like, look, yeah, this is a problem, we're fixing it. But you then start the work streams to fix it, right? And, you know, like, so on one hand you say, well, we had these reports in this issue, and what did we do? We disbanded the civics integrity group. You're like, well, that doesn't seem like you're working on it. It doesn't seem like the problem is fixed. So I think it's beholden on business leaders to say, look, when we hit these problems, we work on them. It doesn't mean, look, we didn't know this was going to be a problem. We didn't know it was going to be an issue. It's fair enough, right? And we're just, and by the way, we're following what customers want because they're clicking on things. But wait, there are these consequences, and we should do something about the consequences. It doesn't mean you can solve it perfectly, but you should be working on it.
The research around children is particularly troubling. You have this research that shows that Instagram can be harmful to teenagers, and yet at the same time, you're exploring building social products for kids as young as 5 years old.
Yeah.
What's wrong with that picture? Isn't that a little terrifying?
Well, I think there's a chance where sometimes that product for the 5-year-old is great, right? Like it could be really educational, learning, engagement, connectivity, but you have to study it and you have to get it right. Like kids, the whole reason we have childhood is we protect them and help them grow into adults. Everyone has a responsibility there.
And at this point, can we trust Facebook to be building the social network for kids? I mean, let's be honest.
Well, I think they have lost trust for good reasons with this, because you're not even responding to this crisis the right way. I think that to regain it, they have to be extra transparent. They have to come forward and say, look, here's our dashboards, here's our metrics, here is the ways that we are trying to work on this and do things. And that's the thing that is incumbent upon them to now start talking. Don't say, oh, we have problems with the whistleblower. Say, here's what we're working on, here's what we're doing, we know this is a problem, we're working on it.
Have you talked to Mark at all, and how do you think he is handling this?
Not yet. I undoubtedly think that they have a whole bunch of internal discussions going on right now, and I wouldn't want to interrupt. I mean, I'm happy to help however I can. I think he's a learner. I have optimism and hope that he will learn from this. I mean, I think his feet being applied to the fire is a good thing in this instance, and then he will go, okay, I now need to make sure that we are being fully investing in protecting children. And I think that's the stance the company needs to be in.
So what is the solution? What is the role for regulation?
So, well, there's regulation, but I think it starts with what's the dashboard that Facebook should be managing towards? So, for example, you say, well, we have an engagement dashboard. We have a sessions dashboard. We have those. Great. We should also have other things in that dashboard. We should say, well, look, if it's causing, we know that certain kinds of content is causing body image issues or causing other kinds of things. Well, we should add that to our dashboard, and we should be measuring to make sure that we are having a positive impact there, not a negative. You don't just need one variable. You don't just need well, do they click on it? That's not the only variable. You can put other variables in it. It's part of the reason why you have a large company. And that's the kind of thing that I would want to be hearing from Facebook about, yeah, we got it, and we know what we're working on, and these are some good metrics that we should work towards, and we are going to improve these metrics, and we're going to report on them, at least to our auditors, and we are going to work on this problem.
So here's another way to ask the question. Is Facebook too big to govern and too big to govern itself? If you have a company with even the wisest people in charge, can they really be making decisions about every single moral, ethical, religious, political, legal issue in every single country around the world, in every language?
So,
is that even possible?
Look, it's challenging, and it's never going to be perfect. There's always going to be lots of errors. But I do think, I mean, like, for example, one thing, like take, for example, the issues of governance in other languages where you don't have it. We have AI that's getting much, much better on languages. Now, it's not quite there yet, but it's within 2 or 3 years, you suddenly have kind of the equivalent of a universal translator. That will make it easier. That doesn't solve all the issues. There's cultural issues. There's other kinds of things. There's a political revolution here. There's other things going on. But that being said, one of the benefits of having a central service is that you can invest in these kinds of protection mechanisms. You can invest in the AI. You can invest in that dialogue and making it happen. I actually think there are good things about global services as well, where we understand other people.
So you don't necessarily think Facebook should be broken up? I mean, because the proposal has been break up the Instagram, WhatsApp, Facebook, or even break up Facebook India. That should be its own thing.
So I precisely think the wrong answer is break up. Right. It's not to say that there aren't, like, start with accountability, start with transparency, start with the dialogue, what you're doing, see if you need regulation from that point of view. Maybe you need to do a public-private thing, this kind of thing. But breaking up means that you don't have the resources to invest in that centralized thing. Think about it this way. I break it up, and all of a sudden I got lots of 4chans and Reddits and everything else, and it's even more mayhem. So breaking up is not the answer.
Do you think the algorithm is the problem, A? And B, do you think they should be choosing people over profit more often?
So the algorithm is part of the problem, but also can be part of the solution, because of which variables are you maximizing? If you're only maximizing engagement, only maximizing sessions, then you're going to have some problems. And that is, to some degree, they may not be doing it for profit reasons, they may be doing it for engagement reasons or strategic, or just like saying, hey, this is what people want, they're clicking on it, that's what they want, hey, they're choosing it. But you should, part of the whole point about exhibiting good governance is to say, yeah, we're going to have lots of engagement, we're going to have lots of people clicking on things, but we're also going to pay attention to good health for them based on the research we're doing.
After that interview, Hoffman says Mark Zuckerberg called him immediately to address his concerns. Hoffman tells me he's still supportive of Zuckerberg running the company and describes him as a learning CEO, saying he's open to growing and changing. We'll continue to watch what moves Zuckerberg makes. Up next, a special edition of Bloomberg Studio 1.0 with Alphabet and Google CEO Sundar Pichai. Stay with us to see that 30-minute sit-down. This is Bloomberg.
An extra $1 trillion in spending not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, but Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Will pricing have to adjust or not as a result of your greener ambitions?
We ran a big survey around 32 countries. More than 30,000 people took part. And as you say, there was a big gap in between people that were worried about climate and people that were taking action.
This is Bloomberg. I'm Danny Berger in London. These are your first word headlines from around the world. Cathay Pacific says it will make significant changes to its flight schedule as Hong Kong tightens quarantine restrictions for aircrew. The move will further isolate the once bustling Asian financial hub, which is largely closed off from the world in an effort to eradicate any signs of COVID-19. The UK government says it has no plans to further reduce the isolation period for people with the virus, even as staff absences put growing pressure on the health services and supply chain. Authorities lowered the quarantine requirement in England to 7 days from 10 last week. But leaders are facing calls to go further after the CDC in America shortened its recommendation to 5 days. Despite this week's drop in European natural gas prices, the region is still at a critical point with record low inventories and a clear risk of running out of fuel if the weather turns colder. That, according to Goldman Sachs. The company's head of energy research says weather forecasts suggest temperatures will drop in mid-January, draining supplies. European equities climb closer to reaching another all-time high. We're still off that by about 0.2%. We're also looking at European S&P futures, rather, on the highs of the day. That's after yesterday's record gains. The dollar is also stronger. We had stronger U.S. economic data, euro weakening. Traders pointing out that the Russia-U.S. call between Putin and Biden will be a key geopolitical risk for this currency pair. We're also looking at a ruble that's down at a one-month low versus the dollar, and your 10-year yield lower by 2 basis points. We're also looking at a third consecutive day of declines in Bitcoin, down by 0.7%, down 8% for the entirety of this week so far, and perhaps a warning for other risk sentiment and assets. This is Bloomberg.
Good to see you. Thank you so much for doing this.
Well, thanks for doing it. I'm so sorry I'm late. I know I'm coming late. But
not at all. It gave us more chance to tweak the lights for the 50,000th time. So.
You're doing well?
Yes. How often are you coming into the office these days?
About 2 to 3 days a week, yeah. How about you? I guess you come in.
Yeah, I'm in every day now, so no more kids on the set. I have to ask, is your son still mining Ethereum?
He and I literally were talking about it last night. He's like, Dad, you are the one who made me give up on it. I'm like, no, I didn't. But yeah, the thing that's good about this is I think it excites a whole new generation about technology, which is good.
I really appreciate you taking the time.
Well, thank you for doing it, and thank you for coming down to do it.
I'm ready to go when you guys are.
From Google headquarters in Mountain View, California, this is Bloomberg Studio 1.0 with Alphabet CEO Sundar Pichai. Born and raised in India, Pichai had almost no access to a computer until college, but just years later found himself rising through the ranks of the world's largest search engine. In 2015, it was Pichai that Google co-founders Larry Page and Sergey Brin chose to run Google and later Alphabet. Now valued at more than $2 trillion, it's one of the most powerful companies on the planet.
Sundar, it's great to be with you today.
Thanks for doing this.
Great to be here in person. Google just hit a $2 trillion market cap. Alphabet, I should say. Where is the next $1 trillion going to come from?
You know, I've always felt, your market cap valuation is an effect of the value you provide. And I feel fortunate our mission is timeless. There is more need to organize information than ever before. I still feel search is our biggest moonshot as a company. People will want radically more conversational experiences. They will want what we call multimodal experiences. They may speak to search. They may look at something and ask what the information is. Being able to adapt to all that and evolve search will continue to be the biggest opportunity. We are so excited about, be it YouTube, cloud, our hardware products, Google Play. So we're building a diverse set of businesses, and underlying all of it is the investments we are making in AI. We've invested $100 billion in R&D in the past 5 years. And so applying AI in a deep way is probably where we will create the biggest opportunity ahead.
Microsoft is making some big acquisitions. Apple's anti-ad tracking technology is shaking up the industry. What do you make of these competitive moves? Your competitors say they're on the right side of history. Are they?
I look at the fact that there are 3 billion people who have access to knowledge at their fingertips. I look at the opportunity we provide. I look at the skills people are learning through YouTube. I feel it everywhere when I go talk to people. And providing access to information and knowledge, I think will end up being on the right side of history as well.
Your predecessor, Eric Schmidt, told me that he feels the latest Facebook revelations are disturbing. Google also has access to massive amounts of our data.
Why should half the world's population, more than half the world's population, trust Google to do the right thing?
We are trying to do more with less data. One of the biggest changes we made was making auto-delete the default setting for new users signing in, and now over 2 billion users have their data continuously being deleted. Look, we rely on trust for people. Every day when people come to Google, they place their trust in us in vulnerable moments. It may be a health issue on which they are trying to understand. There's no more important responsibility we have than doing right by that trust. When we provide Gmail to journalists and realize that their accounts may be under attack by an authoritarian government, that's what motivates us to make sure, be it privacy, be it security, be it trust, we are doing the right thing. Over time, regulation will have an important role to play here. I think privacy regulation is important. In areas like AI, regulation will be important. And so I think, those will be part of the answers as well.
The Facebook fallout, that Instagram can be toxic to teens, for example. Has this raised more or new concerns for you about the impact of technology, tech addiction, algorithms, YouTube even, on our children and their development and their mental health? You're a parent, and you also have a lot of power over how this plays out.
Like you, bringing kids up in this modern digital world is something I think all parents are anxious about, rightfully so. I think, it's part of why a few years ago when in YouTube, we were exposed to a set of concerns, we invested. It became our number one priority to work hard at it. The reason YouTube invested so much in developing YouTube Kids as a safe destination for young children and so on. Look, technology is going to play a big role in helping give children the next wave of opportunity as well. So the answer is to develop it responsibly. We have changed our balance in these areas and saying we think about content responsibility first, and then the pace of development or new features in areas like YouTube. And so that's how we have approached it for a while.
Facebook and Microsoft are all in on the metaverse. What do you think about the metaverse? What's Google's metaverse strategy?
It's always been obvious to me that computing over time will adapt to people and people adapting to computers. You won't always interact with computing in a black rectangle in front of you. So just like you speak to people, you see and interact, computers will become more immersive. They'll be there when you need it to be. So I've always been excited about the future of immersive computing, ambient computing, AR. And
Does that count as the metaverse? Is that what that is?
Metaverse is, I think it means different things to different people. The way I think about it is evolving computing in an immersive way with augmented reality. As part of that, there'll be many experiences, some of which will be immersive, interactive virtual worlds, which is the metaverse concept. And but I think this doesn't belong to any company, right? This is the evolution of internet and the web, the internet. All of it will continue to evolve.
Google was famous for its campuses, where you could go and never leave. You had everything you ever wanted. Now you've said they can be flexible. They can work from home. They can work at the office. They can be hybrid. They can work remotely permanently, perhaps. Are you committed to really letting them do this forever? And if so, how does that change the future of work and society?
Look, we've really embraced the fact that the future is going to be flexible. At Google, we've always tried to give, agency to our employees. But we do realize the importance of bringing people together, the creativity, community, and collaboration that comes with it. So the balance we are striking is this notion of 3-2. But we are giving the strength of our company is we have more locations than most of the companies. So we're giving people choice to move anywhere in the world. 4 weeks they can work from anywhere. We're going to accommodate 20% of our workforce to be remote over time. So we're going to embrace that flexibility. And
forever?
Forever, yeah. And we're committed to it. Through it all, it forces us to design better products. And since people use Google Workspace to run their companies, I think it gives us a chance to innovate and bring all that out. I think there is so much value in giving people more flexibility between their personal and professional lives. And I think it'll lead to people being happier. And I think companies can be successful in that model. And so we are trying to get the best of both worlds, but embrace the flexibility and see where we go.
How confident are you that when you look back, you'll be able to say Google did enough to help save the world?
We are putting so much energy and resource into it.
Protesters breached the Capitol.
Democracy has prevailed.
A flash mob decided to take on the shore.
The giant container ship blocking the Suez Canal.
1,000 new types of crypto coins.
Crackdown on tech in China. In the billionaire space race.
The Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Songs, you lie.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
You grew up in India, you lived through droughts, water was scarce. How has that experience shaped your feelings about the urgency of stopping climate change?
You know, I grew up in Chennai, India, and a big part of my childhood was, really pretty severe water scarcity. You know, we would get water trucked in for the streets and stand in lines and carry a few buckets of water home. There was no running water for many years. And, but fast forward a few years ago, Chennai had 1 in a 100-year flood, which was a very extreme event, kind of drove home. That combined with a few years ago, waking up to the orange skies here in the Bay Area, seeing the look of concern on my children's faces and having to explain it, all kind of drove home in a deeply personal way for me. So I think it's the most defining issue we all face, and definitely something very motivated on working towards.
I remember waking up to those orange skies too and having to have that same conversation with my kids. Do you think the commitments at COP26 went far enough?
I'm encouraged by many things. We have to tip our hat to the people who are working super hard. The issues and the trade-offs are genuinely difficult. You have to keep the economies growing. It really matters. But at the same time, it's a pretty severe, urgent issue. So I'm encouraged by the progress. I think it builds on the Paris Agreement, so I can see the forward progress. There is the deep anxiety that it all may not be enough. But we have to be optimistic and keep pushing.
Google has set some aggressive targets to run entirely on clean energy, to be the first tech giant to do so 24 hours a day. How confident are you that when you look back on this time, let's say a decade from now, you'll be able to say Google did enough to help save the world?
We are putting so much energy and resource into it. It's always been kind of a founding value for us. We've been carbon neutral since 2007. We've been matching our energy consumption with renewable energy over the past few years. So this, we are now pushing, it's a moonshot to be 24/7 carbon free. That means every search you do, every email you send, that we can do it carbon free. We were at 61% in 2019. The number is now 67%. We have set our goals to be 100% by 2030. And to do it globally, that means we have to solve new things which we haven't done before. Wind and solar alone won't be enough. We just started geothermal in Nevada. We will be investing in newer technologies, including carbon capture, et cetera, over time. So that's what excites me. We are a technology company at heart. So there are many answers to this problem. Some of it is that we are going to have to innovate our way out of it. And we want to push as hard as possible in doing that.
Our Bloomberg New Economy Forum is happening this year in Singapore, and the Asia-Pacific region is one of the fastest growing internet economies on the planet. Where do you see the most room, the most opportunity for Google to grow there?
It's such a fitting time frame. I'm glad you're focused on the region. It's the most vibrant region we see. It's our 20th year since we opened our office in Tokyo. It was the first office outside the Bay Area. You have 2.5 billion people on the internet. There are many areas in which they are leapfrogging trends which are here and embracing the future. Digital payments is a great example. So many of our products originated from APAC, Google Maps, Google Pay. a lot of our journey to bring computing to more people is playing out in Asia as well. I am excited about also the work we are doing through cloud, because the companies there are rapidly transforming themselves digitally. So a chance to provide that is something very exciting for us. It's a super dynamic region. I feel like we are learning as Google, being in the region. And so I think it'll transform. The first 10 years, I would have said we took products here and brought it to APAC. Over the past few years, we are beginning to build things there. And some of our future global products will be APAC first and rest of the world later.
You can't talk about APAC without talking about China, and you're facing stiff competition from Chinese tech giants there and beyond. What should U.S. policymakers know about competing with China?
You know, there's a lot of conversations about U.S. and China. The competition is fierce. When you look at areas like AI and quantum computing, where we are investing a lot, you know, the Chinese companies are neck to neck. What I think about, you know, I was encouraged by the news coming out of Glasgow about the U.S.-China agreement on climate. To me, while we talk about all the areas where we are competing, some of the biggest areas which are common challenges for all of humanity. The pandemic was one. AI and AI safety over time will be a shared one. Obviously, sustainability is another area like that. So I think these are all areas in which the countries can come together. And so I think that's a way by which we think about as, you know, when we compete on the internet, and there may be different visions of how the internet plays out. So I see opportunities both sides.
What are the chances that Google search will ever come back to China, or that Google Cloud would ever come to China?
You know, today we don't provide most of our signed-in services in China, and I don't see that changing. But, you know, there are ways, as I said, in areas like AI or sustainability, I think there'll be opportunities for us to work together. Through cloud, we will support multinational companies which have presence everywhere. And so maybe there are opportunities to work that way as well.
AI is advancing at an astonishing rate, and it is hard to understand sometimes what this really means. In concrete terms, how will our lives look different, let's say 10 years from now, as a result of AI?
You know, done correctly, you know, in many ways, it's going to be helpful to you. You'll take it for granted. The same way today, for example, in India, over 1/3 of the queries on many phones come through voice. That is something people take for granted. You can do it. So over time, you'll expect to speak and be able to understand any language in the world. And, you know, those are all ways it's going to make it better. You may go to a doctor's office and go through a scan, and the system may be prioritizing for the radiologist so that they don't miss some important things, maybe giving them a second opinion. You know, so these are all ways in which it will seamlessly start playing a role, and I think we'll see the effects of that.
You mentioned if done correctly, and there are concerns. There are fears that AI will replicate the worst of society, even under Google's own roof, from your own researchers. What scares you most about AI? What keeps you up at night?
It's the most profound thing we are working on as humanity. And anytime you're developing technology, there is a dual side to it. I think the journey of humanity is harnessing the benefits while minimizing the downsides. The good thing with AI is it's both going to take time. I think I've seen more focus on the downsides early on than most other technology we've developed. So in some ways, I'm encouraged by how much concern there is. And you're right, even within Google, people think about it deeply. We publish a lot of research. I think it's more important that there are outside academic institutions, governments, nonprofits looking at this issue as well. So I think it'll be an issue which will have a lot of attention, which gives me a lot of comfort as well.
You said you'd pick up some new hobbies in the pandemic. What did you start?
Cooking pizza, just learning to cook, which I was never good at. I've gotten a little bit better.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
You have presided over Google through massive social movements that reverberated in and outside the company. What have you learned as CEO since the walkout?
For me, it was a moment. I think it changed the company for the better. We've always been committed. It gave us an insight on what more we could do. We undertook deep commitments, and the biggest, overall in diversity and inclusion, I think if you're committed and you actually put in the effort behind it, you can make a difference. Now we have stated clear goals. We are on track to meet those goals. But it forced us to think about new answers. So for example, tech companies used to talk about the pipeline problem, but we are now going to places where the talent is. We are working much harder. So going to Atlanta, going to DC, going to Chicago, going to New York, that's improving our diversity and representation at all levels.
The war for talent is even more competitive now in this new world. What are you offering? Elon Musk has said big tech is a place where talent goes to die. How do you respond to that?
Look, I look at the fact that we are looking to hire 30,000 people next year. I look at the impact we have on many people coming and working in the latest cutting edge things. And many people come in, people leave Google. We are proud of people who have left Google. I think there are over 2,000 companies that have been started by whom we call as Zooglers. I'm equally proud of that, right? I think we are one part of a big system, and I think I'm proud of the role we play in bringing in people and the impact they have over time in the outside world.
All right, that's most of the heavy stuff out of the way. We're going to do some rapid fire just to get to know you a little bit better. You said you'd pick up some new hobbies in the pandemic. What did you start?
Pizza, cooking pizza, just learning to cook, which I was never good at. I've gotten a little bit better.
Cricket or soccer/football?
Wow, it's tough. Both. Please don't make me choose.
Okay. Squid Game or Ted Lasso?
I watched both, though Ted Lasso is much more calming, and so I'd rather take Ted Lasso over Squid Games any day.
I know you're a voracious reader, so what's the last good book that you read?
I've been on a podcast binge, so a lot more podcasts than books nowadays.
Okay. Favorite videos you watch on YouTube with your kids?
A lot of music videos. This whole notion where creators are watching other things and commenting on it, it's a trend which my kids are really into, and I've kind of gotten used to it now. So, watching other games, etc. It's a phenomenon.
Screen time policy that's worked for you as a parent, and what's not worked?
I've kind of given agency to my kids. The only thing I tell them is that I can look at their digital well-being once in a while with them, and so.
How do you do that?
I ask them to show it to me, and they show it on their phone. So, so that's pretty much the only thing. So beyond that, it's agency and talking to them about it and making sure we are spending time doing other things.
And making sure they develop good habits,
That's
basically.
Right, yeah.
Metaverse or real world?
Done correctly, you shouldn't feel the need to make a choice. You always want to be present in the real world, and when you feel the need to do something, you want to do that. But I do think presence and the realness of the real world will end up mattering for humans for a long time.
Do you own any crypto?
I wish I did. I've dabbled in it, but in and out.
In and out, okay. Larry and Sergey, I'm not going to make you choose. How many times a week do you talk to them?
I talk to them regularly. It kind of ebbs and flows. And so there are times we get excited about something and we spend a lot of time talking it through, but it depends on what I need.
A piece of advice you wish you had in your 20s and a piece of advice you wish you had in your 40s.
20s would be, being patient. I think when you're young, you're very impatient, which is a great thing. But sometimes you do amazing things by slowing down and being really focused and doing it over a period of time. And so I would advise the younger version of me to be more patient. Maybe at 40, I would say, when I look at climate, I want all of us to be impatient. So, I feel like when there's an urgency towards something, I think the world needs to be impatient. So that's the advice I would give to an older version of me.
How much do you personally wrestle with the decisions that you have to make? And how much longer do you see yourself being the CEO of Alphabet? Not just Alphabet, but also Google.
Yeah. On the first one, there are moments we all have to make tough decisions, and some decisions weigh on me. But it's a privilege to do it. I have very good people helping me think things through. So I think the combination makes it all, fine. On the second thing, I'm so energized by the things we need to do. I didn't have much access to computing growing up. It changed my life a lot. The one laptop per child goal really motivated me to come into technology. And when I look at last week, us launching an affordable smartphone in India, the chance to bring the next billion users in Asia and in Africa online, that gives me a lot of energy.
All right. Well, we'll be watching from afar. Sundar Pichai, thank you so much for joining us. It's
Thanks,
wonderful
Emily. Pleasure to be here.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
What do we know and what don't we know? Because there's a lot of speculation, a lot of anecdotes circulating right now.
Omicron definitely has the characteristics to create us concerned for many reasons. But also we have been preparing for a moment like that for months right now. And I feel comfortable that the playbook will work. So what is the playbook? One, it is to understand more about this virus. The second, of course, will be to protect against infections. And the third is to treat. Let's take it one after the other to understand. I think there are a few things that are not very clear yet with Omicron. One, it is the clinical manifestation of this new variant. Is it creating more severe disease or not? Is it transmitted easier or not? Is it going to younger or older people? All of these are things that, as we see clinical cases coming out and the numbers are getting bigger, that's something that we will know in a few weeks.
I think the main focus is the inflation story.
Inflation is real. We're going to watch how it plays out in 2022 and 2023, but that is one of the bigger risks that we're talking about with our clients.
We believe that 2022 will be more a story of rotation rather than general stock market upsurge as we saw in the last years.
All this excitement about tapering and tightening, I think, is overdone.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
From Berlin and New York on this Thursday, December 30th, our top stories today. Another record-setting day in the pandemic, more than 1.7 million new infections reported around the world. That's the third day in a row with over 1 million new daily cases. Fingers are pointing at Credit Suisse chairman Antonio Horta Osorio. There's a report that he broke another country's quarantine so he could watch a pretty famous tennis tournament. And Presidents Biden and Putin talking again today. There are a number of issues they want to discuss, but U.S. concern about Russia's military buildup near Ukraine is going to top the agenda. Welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Kaylee Lyons in New York. Anna Edwards is off this week. So, Kaylee, we saw another record high in the U.S. yesterday, but it doesn't feel like there's a lot of momentum, and there certainly isn't very much volume.
Yeah, not a lot of volume. It is, after all, the second to last trading day of the year. A lot of people aren't working this week, even though you and I are, Matt. And yes, we got that record high, but we were only up about 0.1% on the day. So it may have been the smallest move to a record we'd seen in quite some time. That also didn't really follow through in Asia overnight. Broadly, the MSCI Asia Pacific Index was lower by about 0.25%. You did get some outperformance, though, from Chinese equities. The CSI 300 up about 0.8, and that's after you saw China pledging to provide more income tax cuts, personal income tax cuts in the year ahead, and also just further bets on easing coming from the PBOC. In FX, I also wanted to point to the continued weakness in the yen, weaker against the dollar by about 0.2% today. We are sitting at 115.16, which is the weakest level in a little over a month. And then, of course, we saw all that selling pressure in bonds yesterday. That was evident in treasuries, and it did see some follow through of that in Australia overnight, up 10 basis points on the 10-year yield to 1.629. As for the picture here in the U.S., yes, we've gotten 70 record highs in the year 2021. That is the most records going all the way back to 1995. And it does look like we could see another one today, although, again, a small gain to one. Right now in futures trading, we're up about 0.1%, sitting at 47.90. Will we reach that 4,800 level by tomorrow, which is the final trading day of the year? In the bond market, of course, we saw that big move upwards yesterday, actually broke above that 50-day moving average. We're retracing some of that today, down about 3 basis points on the 10-year Treasury yield to 152. Still, though, north of 150, which is something I didn't know if we'd see by year end. The dollar is broadly stronger on the day, and then I would just point to oil, Matt, snapping a 6-day winning streak. Right now, WTI down about 0.6% to just above $76 a barrel.
Yeah, holding, though, near a record for the month, $76 for NYMEX. We're looking at 79 for Brent crude. Here in Europe, we see a little bit of a mixed picture. Not a lot of movement in one way or the other, although most of the arrows are to the upside. Notice Russia showing some big gains today. Take a look, though, at the Western European benchmark, Stock 600. It is also hovering near a record right now at 489.29. If we get to 490 and close there, that'll be a record high for the Stock 600, being led by tech shares bouncing back after the drops yesterday, but also defensive sectors like real estate and healthcare. Euro dollar also not moving much, but down to 113.05. This time yesterday, we were looking at 112 and change, but it rallied into the end of the session. The 10-year German bond is at negative 20 basis points, so getting closer and closer to zero, now coming off a little bit, but still up there at levels that we haven't seen much lately. And Bitcoin dropping again, $46,836 for Bitcoin. So it continues to lose ground into year end. Christine Aquino, who helps lead Bloomberg's market coverage, joins us now. And Christine, it feels like the air has been let out. Kind of the last couple of trading sessions have been lackluster. Volume obviously going to be weak around these times, but the momentum seems to have gone out of the Santa Claus rally that we saw.
Yeah, I think that's exactly it, Matt. And, you know, headlines such as we're getting today, which is we're seeing cases soaring to records, certainly not helping. And again, I think it's serving as another reminder that it's really hard to trust this sort of year-end price action for the seasonal reasons that we know, of course, with thin volumes and liquidity, but also the fact that the Omicron story really is still playing out. And it's still too early to see and call it as whether it's going to end up more negative than expected or less negative than expected, one way or the other. But again, it really lends markets to more vulnerable headline-based trading. And as far as headlines today goes, it's certainly not looking more positive today.
Well, and obviously it hasn't been, super sizable moves to record highs. There's been a lot of fluctuation, and again, it's light volume. When volume picks back up again in the new year, do you expect the direction of travel to continue to be higher, or are we looking at stocks going lower at that point?
Well, Kaylee, I think with any sort of rally like this, you'll always have people expecting a bit of a correction afterwards, right? But I think there's still a lot of fundamental reasons for equities to see a better 2022. The earnings picture is still quite positive, and I think there's still a lot of hope in markets at the moment that perhaps, once we see the Omicron situation play out, then there could be room for a bit of a correction higher in some of the assets that have really gotten hurt by this move. But again, yeah, I think in 2022, the expectation is largely going to be based on how inflation plays out and how policymakers respond to that. Of course, we've seen inflation feature as one of the biggest fears or concerns for investors heading into next year. And so I think it would be a question of whether those earnings outlooks that still look quite healthy, particularly for the S&P 500 companies, would be able to withstand those higher costs and whether they'd be able to keep their margins up.
Well, on the subject of inflation, Christine, I think if you told people that we would be sitting at 152 on the 10-year at year end in the face of near 7% inflation, people would be very surprised to hear that. And yet that's where we are. We did see that move above the 50 DMA yesterday when it comes to treasuries. We're retracing some of that today. What do you make of the movement in the bond market right now?
Yeah, I think it's really interesting, Kaylee, and you're absolutely right. I think there is definitely this momentum that's pushing yields higher just because of the picture that we're looking at for inflation, and also the fact that we are about to see the Federal Reserve and a bunch of other global central banks embarking on less accommodative policy next year. But then again, I think there's a lot of fundamental structural things that are going on in a bond market that are keeping yields in check. I think broadly the expectation is that while we may see yields higher into next year, it's potentially going to get capped at around 2% once we get to those levels in interest rates that would be closer to the terminal rates for the Federal Reserve and other central banks. I think that's when we may see the move higher in yields lose a bit of momentum here as those interest rate hikes that markets are expecting flow through the economy and do as what they're expecting, which is slow that inflation impulse a little bit.
Well, and hopefully not slowing economic growth a little bit. What are we expecting in terms of earnings, Christine?
Well, Matt, as mentioned, the expectations for earnings for most major equity markets is still very much healthy into next year. But again, yeah, I think this is where the inflation question really comes into play. I think you and I were speaking about this yesterday as well. Just the question of whether these companies are going to be able to keep up with costs into the new year, whether they're going to be able to keep up those operating margins. I think that's going to be really crucial. And also the question of whether they're going to be able to pass on these costs to consumers, and if consumers are going to be able to pay, and whether they'd be willing to pay for the prices of those goods. And so a lot of these questions really hanging in the balance. But yeah, heading into 2022, still a healthy profit outlook picture, but definitely some interesting themes that could yield some divergences into next year.
All right, Bloomberg.
All right, Christine, thanks very much. Kaylee?
I'll pick it up here, Matt, because I want to get back to, yes, we both thank you very much. And now I want to move on to some stocks moving in pre-market trading here in the U.S. All of them, unfortunately, moving to the downside this morning. Biogen is one of them. And this stock was up 9.5% yesterday, its biggest move in quite some time, on reports that Samsung was potentially looking at a deal, or rather Biogen was in talks to sell itself to Samsung. Then overnight, Samsung said no such talks are taking place. And as a result, Biogen giving back a lot of those gains, down about 6% in early hours. Another mover to the downside is Moderna. Yesterday, it actually snapped a 6-day losing streak, but it doesn't look like those gains will necessarily hold today, because right now that stock is down about 0.4% in pre-market trading. And finally, one other story I wanted to note is Micron. We've talked a lot about how China's COVID-0 policy has an impact on supply chains worldwide, and that is true for Micron Technology, because that lockdown in Xi'an, 13 million people, an entire city shut down, is going to affect production of some of its memory chips. That's what the company said yesterday. And as a result, that stock is down just fractionally in pre-market trading by about, call it 0.6%, Matt.
All right, thanks very much for that. Coming up, virus cases, as we said, hit another daily global record. We'll speak with Oksana Pyzik, UCL School of Pharmacy Global Health Advisor. And Credit Suisse finds a second breach of COVID rules by its chairman, Antonio Orta Osorio. Details on that report ahead. Plus, hard time for Ghislaine Maxwell. The convicted British socialite won't serve her prison term in a so-called Camp Cupcake. It'll be more difficult if she loses an appeal. This is Bloomberg.
When your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines in New York with Matt Miller in Berlin. Well, new COVID cases hit a global daily record of 1.73 million yesterday. That was the third day in a row with more than 1 million new infections. But there's also some good news. Virus-related deaths in the U.S. are falling even as case numbers rise. And researchers say 2 doses of Johnson & Johnson's vaccine slashed hospitalizations due to Omicron in South Africa by up to 85%. Joining us now is Oksana Pyzik, Global Health Advisor and lecturer at University College London School of Pharmacy. Oksana, when we take a look at the case numbers relative to hospitalizations and deaths, how much can we contribute the divergence to a lag effect in those deaths and hospitalizations?
I think we're still waiting for some of that lag effect to kick in. We are just off the tail end of Christmas and heading into the new year, where we would have expected a lot of intergenerational mixing. And of course, elderly people are going to be most vulnerable to Omicron. And Omicron, unfortunately, is much more effective at reinfecting individuals who have already had COVID before and may have had COVID vaccines on top of that. But the good news around that is that reinfection tends to be milder and in some cases even asymptomatic. The KCL study here has shown that the top 5 symptoms associated with Omicron are much more similar to cold-like symptoms, which is also why we're facing, at least in London, a big, I'd say, shortage around lateral flow tests. Even PCR has a backup, and that's because people are acknowledging that if they have milder symptoms, that this could be also Omicron, and also is a challenge to get people back to work without having that negative test in hand in the UK.
Well, and here in the U.S., there is somewhat of an effort to get people back to work faster, in that the CDC has now recommended that you isolate just for 5 days instead of 10 if you aren't exhibiting any symptoms. That's not something that they are choosing to go with where you are in the U.K. Do you think that that new 5-day rule is one backed up by science and appropriate given this current outbreak?
Well, 85 to 90% of transmission happens within those first 5 days. You have the highest amount of viral shedding even before you exhibit symptoms and when those early symptoms kick in. Now, again, that rule is for asymptomatic cases, so that's a really important point of differentiation as well. In the UK, we have also cut down the isolation requirement, but to 7 days. And the WHO has really summoned for caution around making very big changes based on preliminary and early data about Omicron severity. Again, even the UK HSA, which is the health security agency here, has said their assessment is in actually low confidence that it's actually a milder variant. We just need more data to back that up. The preliminary studies certainly indicate this, but we will see in coming weeks to what extent people need oxygen and other treatments as well, based on hospitalization. And in the last 24 hours here in the UK, we saw a rise by 900.
Does it look like we're going to be facing 2 million, 3 million new daily infections globally over the next couple of days and weeks? I mean, is everyone going to get this?
Well, it is accelerating, and the rate of breakthrough infections is also concerning. But the key here is no longer to focus just on cases. What we really need to ensure is that in areas with low vaccination, that we boost up that coverage so those symptoms are muted, and so that we have less pressure on the healthcare system. This rate of spread is unlike any variant we have seen this so far. So it is likely to reach those pockets of people who are more vulnerable to the disease, as well as the healthy and robust. But if we can reduce hospitalizations, and if we can keep the workforce, essential key workers going, then we reduce the negative impact overall. It's a really fine balance between ensuring that we're reducing that risk, but also not allowing society to break down. Here in the UK, we have had 1 in 10 NHS health workers who have had to go off sick, which has also led to, due to COVID, which has also led to a change in policy to ensure that health workers are actually omitted from isolation requirements just to keep up with the growing demand.
How is the NHS, how is the UK health system holding up, Oksana? It's not, it wasn't previously famous for getting people in to see doctors quickly before the pandemic. Are hospitals, is the system overcrowded?
Well, many of the routine operations have had to be canceled. For GPs are still only taking online appointments as well. So the NHS is actually in a worse position now than when we first started in the pandemic, due to just the onslaught of pressure over the last 2 years, with many health workers off due to burnout or sickness. And limited resources as well. So now we're facing the even larger wave, but with a really battle-hardened staff. Certainly, we have advances that make it easier in terms of knowing which steroids we should be also administering, et cetera. But we shouldn't underestimate the impact that this has just on the workers themselves. And here, they don't have the FFP2 masks, which, again, the BMA, which represents the essentially body of doctors and healthcare professionals, have been demanding from the government for more than just surgical masks due to aerosol transmission. So certainly the NHS is in a difficult position. And even if Omicron is milder, the sheer number of cases coming in January, many people are worried about how the system's going to hold up.
Oksana, thanks so much for giving us an update. Oksana Pajcic, their global health advisor and a lecturer at the University College London School of Pharmacy. Coming up in the next hour, more on the virus with Dr. Chris Beirer, Johns Hopkins Bloomberg School of Public Health professor and epidemiologist. This is Bloomberg.
When you talk about the commercial viability, the idea that these companies can actually make money off of this here, does this become, I guess, something that's niche in the sense that you have to pay several $100,000s to do it, or does it come back down to a level where just regular folks like you and me will somehow find a way to be able to take a trip up, and this can be a business model that will be sustained?
I think it's important to note that space tourism is a small segment of the overall global space economy. Space tourism accounts for $1 billion of a global $350 billion global space economy.
What's the rest of it?
$260 billion of that is satellites, manufacturing them, launching them. And these satellites we use in our everyday lives, whether that's to listen to the radio, to watch Bloomberg on our satellite television, or to navigate us to our destination via GPS. And I hope in the near-term future, we will add getting our internet from space.
Protesters breached the Capitol.
Democracy has prevailed.
A flash mob decided to take on the shore.
Giant container ship blocking the Suez Canal. 1,000 new types of crypto coins.
Crackdown on tech in China. In the billionaire space
The
race.
Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
It did not get everybody out.
Songs you love.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Wines in New York with Matt Miller in Berlin. Now let's get the first word news. And British socialite Ghislaine Maxwell faces years in a prison that's likely to be harsher than the so-called Camp Cupcake, where Martha Stewart did time. The ex-girlfriend of disgraced financier Jeffrey Epstein was convicted in New York of 5 counts tied to sexual abuse. Because she was convicted of sex crimes, Maxwell is not eligible for a minimum security prison. President Biden and Russian leader Vladimir Putin plan to talk by phone today on what the White House calls a range of topics. U.S. concern about Russia's military buildup on Ukraine's border is likely to be high on the list. In their call several weeks ago, the U.S. president warned that Russian aggression would be met with unprecedented economic sanctions. A new study on the Johnson & Johnson coronavirus vaccine is welcome news for Africa. 2 doses of J&J shots last hospitalizations caused by the Omicron variant in South Africa by up to 85%. The J&J vaccine is increasingly being used across the continent. And the chairman of Credit Suisse reportedly broke quarantine rules a second time. According to Reuters, Antonio Ortio Osorio attended the Wimbledon tennis finals in London in apparent contravention of UK rules. Earlier, he was said to have flown out of Switzerland when he should have been in isolation. Credit Suisse isn't commenting. And Bitcoin resumed its December retreat today. The world's largest cryptocurrency fell below $47,000 in Asia. It's down some 18% this month after setting a record in November. Bitcoin has now fallen to its 55-week moving average. And Matt, as we know, fundamentals don't often matter with Bitcoin, but the technicals always seem to, and that 55-week moving average level has been providing somewhat of a key floor as of late. So it'll be interesting to see if we breach it.
Yeah, it's harder to pin down the fundamentals for something like this, more of a global phenomenon than other risk assets that we look at. It will be interesting to see if leverage unwinding is one of the problems here. That's what we've heard from Ben Emmons over at Medley Global Advisors. He's said that especially retail is unwinding leverage into year end. It looks like that certainly happened. What is this? The worst month, I believe, since May, right? We're now down 16, 17, 18% for the month of December.
Well, and what's interesting, we often talk about the correlation between Bitcoin and other risk assets. And when you look at the S&P 500, we're positive by about 5% or so in the month of December, whereas Bitcoin has had a really, really bad one. So there seems to be a breakdown in that correlation, Matt.
Yeah, absolutely. That's a really good observation. Coming up, we're going to talk about ESG, the investment boom there with K-Hope of Bank America. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Good Thursday morning. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Kayleigh Lyons in New York. Anna Edwards is off this week. And, I would say it's a good week to be off because we're sitting between the traditionally calm holidays, Christmas and New Year's. But there has been a lot of interesting news, Kayleigh, and we've gotten even some interesting data points. Yesterday, we were talking about the Richmond Fed, and today we're going to get jobless claims.
Yeah, there's definitely still data trickling out. There's still headlines trickling out, as always, when it relates to the virus. All that said, though, there's not that much action within the equity markets. We're tiptoeing around record highs, both in Europe and the U.S., but on very, very light volume. Right now, the Stock 600 is trading on volume 48% below the average over the last 20 days. So we just have to keep that caveat in mind. The index, though, is climbing today, up about 0.2%. We're sitting at 488.79. So we're just about a point shy of that all-time high. And of course, here in the U.S., we hit the 70th all-time high of the year yesterday, only on a 0.1% gain. And once again, we are seeing small gains in the futures session, up less than a tenth right now in S&P E-minis at 47.88. In the bond market, you did actually see a pretty sizable move upward in yields yesterday, breached that 50-day moving average on the 10-year Treasury yield, but we're retracing some of that today, down about 2.5 basis points or so to 152.38. And then, of course, we've been talking about Bitcoin, and the technicals really matter here. That 55-week moving average is what it is now testing. Right now, Bitcoin down about 0.8%. We are below $57,000. And as for some stocks to watch in pre-market trading, one is Biogen. It saw a big gain yesterday on reports that it was looking to sell itself to Samsung. It was up about 9.5% on that. Then overnight, since Samsung, those talks are not happening. So that stock is down about 6%. Novavax is also lower, could be its 8th down day in a row. It's down 1.5% this morning. Moderna fluctuating between gains and losses in the pre-market session after snapping a 6-day losing streak yesterday. It's a better story for Pfizer, though. Of course, it is not just reliant on the COVID-19 vaccine. It has a treatment, that pill, that has gotten FDA approval. So that stock is up a little less than 0.5%, Matt.
All right, thanks very much for that. Let's move on now to ESG, because issuance of ESG bonds from corporations and governments worldwide surpassed $1 trillion for the first time this year. And according to Bank of America, 2022 is shaping up to be another big year. In fact, 2023, 2024, they see a real explosion of growth in the sector. Kay Hope, head of ESG for Global Fixed Income Research at Bank of America, joins us now out of Florida. And Kay, you know, this is not a secret. We have been talking all year about how investors are starting to really take this industry or this segment seriously. Why do you think we haven't seen a bigger rush into ESG?
I think we have seen a big rush in some parts of the world, but you're right. Other parts are lagging or just getting into the game. We've seen, as you said, over $1 trillion in labeled bonds issued this year. It's definitely a record, but a lot of this is being driven by regulation, particularly in Europe, as well as by investor interest in social and environmental issues.
So where do you see the biggest interest, and why is the U.S. lagging?
Okay, so just to give you an idea, $1 in every $10 of investment into global bond funds this year has gone into ESG funds. But it's interesting that that really doesn't tell the whole story. In Europe, it's $7 in every $10 that goes into ESG funds. And in the US, it's only 40 cents of every $10. Some of that is driven by differences in regulation. And the sense that the sense you get when you look at how the numbers are moving is that the US is getting into the game on this. The flows into ESG funds are increasing at a higher rate than what we see going into non-ESG funds in the US. It's just that we're starting at a much lower base. You know, the regulatory situation is simply different in the US at this point.
Well, and speaking of regulatory concerns, how much of an issue do you think greenwashing still is?
I think greenwashing will be one of the big stories in 2022. A lot of investors are looking at both labeled bonds and at ESG as an overarching concept. And so there have been times when they took a green bond or invested in green bonds simply because that was part of a mandate or solved a problem that they saw that they wanted to address. As people kind of look under the hood of some of these bonds, the greenness might vary somewhat. And I think as we get to a place where we have more consistent thoughts and rules about what constitutes ESG, it's a lot harder for some issuers to bring these bonds that are maybe less sincere in their approach or maybe just less robust.
Well, and obviously
investors are going to be asking more questions.
Yeah, and when we talk about ESG, it's kind of a broad basket, but there's really 3 different parts to that. You have the environmental, you have the social, and the governance. Which one do you think is the most prominent, given the most weighting right now when it comes to investing?
This is an interesting thing, and I think the first answer I would give on that is environmental. But at the same time, I think it's important to note that depending on what kind of instruments you're talking about, that varies somewhat. So with things like supranationals, we've seen a lot of issuance of social bonds. These are exactly the kinds of organizations that use those funds to address issues with healthcare and access to education and very important social issues that, for instance, a corporate might not face. But I think the environmental issues do stretch across the board.
There is also, to me, it's interesting because people come on and talk about the fact that they think returns, looking for returns is maybe at odds with doing good for altruistic reasons. However, diversity, for example, in management boards is a key part of ESG, and I would think that will really help you boost revenues. Do you think the two can be aligned?
It looks like we're having some trouble with case connection there, Matt. But I think it is a really interesting question. If you make the investment based on, an ESG lens, trying to do the right thing, do you get the returns? And the performance of these funds does become a key question, Matt.
Yeah, absolutely. And of course, there are many different parts to ESG. It's just such a huge and complex topic. Kay, I think we have you back now, and I was just wondering what your thoughts are when people talk about returns being at odds with, investing for altruistic purposes. Aren't there a lot of cases where those two things are aligned?
We do see cases where they're aligned. And I think one of the key areas is we have shown in our research that overall volatility in labeled bonds, your green, social, sustainability linked bonds, tends to be lower than for conventional bonds. And part of that is because you get an additional investor base in the labeled bonds who are more of a buy and hold style investor. So when you do have market volatility, those labeled bonds historically have outperformed.
And finally, obviously, inflation has been a big theme for 2021. It will likely continue to be so in 2022. A lot has been made about the inflationary impact of the green transition, and I'm wondering how you view that.
Ooh, that's a great question. In terms of inflation, it's certainly a concern for next year. But I feel like with the momentum that we're seeing on the labeled bond side and towards ESG overall, those things are going to kind of overtake some of the inflation concerns going ahead.
All right, really great to talk to you, and thank you for waking up early for us down in Florida. Kay Hope, head of ESG for Global Fixed Income Research at Bank of America. Appreciate your time and Happy New Year. And coming up, we'll turn to geopolitics and tensions in Ukraine. What to expect out of the U.S.-Russia talks later on today. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Protesters breached the Capitol.
Container ship blocking the Suez Canal. Types of crypto coins.
Crackdown on tech in China. In the billionaire space race.
Delta variant.
Chip shortage.
Rising energy
It's a
prices.
huge crisis.
The Omicron variant has
In London. This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Matt Miller in Berlin. Well, Presidents Joe Biden and Vladimir Putin of Russia will hold talks over the phone today as the U.S. and its allies raise alarm about Russia's troop buildup on the Ukraine border. Joining us now with more is Marty Schenker, Bloomberg editor-at-large. So, Marty, this is not the first time that these two presidents have spoken recently. They did so just 3 weeks ago, and there wasn't necessarily a tangible outcome of those talks. Do we expect something different today?
Well, I don't know that we expect something different, but clearly Vladimir Putin wants to talk to Joe Biden personally about assurances over NATO. I think that is the key for the Russians. And on the Biden side, he basically has to do no harm.
Right. So, and it seems, you know, obviously the president has put economic sanctions on the table, but is use of force just something that's not even in the cards?
I don't think the use of force on the part of the United States is in the game here. But what I think Vladimir Putin may try to do is to create a split among the NATO allies. That is the key for him, and anything he can do to sort of sow dissent among the NATO participants, he will try to do.
What is Putin's ultimate aim here? You know, we've had a lot of really great Bloomberg opinion pieces over the last few weeks because of the anniversary of the breakup of the USSR. Is he trying to enlarge the territory of Russia?
Well, that's sort of the conventional wisdom that, yes, Vladimir Putin would very much like to see a return of the dominance that it had, 2 decades ago. I don't think that that's really a practical outcome for his actions, but he does want to keep the West off balance, and he's a master at it. He has an outsized influence on the political happenings in Europe, given the size of his economy and his military.
And his energy supplies. You know, here in the West, we kind of frame Nord Stream 2 as leverage that maybe Germany has against Russia, but it really feels like Russia has all the leverage here since we're dependent on the gas.
Yeah, and, with record natural gas prices spinning through Europe, and the gas supplies that Russia holds are key to keeping Europe on an even keel. So I would say that definitely Putin has the distinct advantage on the energy side. But at the same time, he needs those dollars that he gets from those energy exports to keep his economy flowing. So it works both ways, Matt.
How much does the Biden administration have to think about other adversaries when dealing with Russia, in that you have Russia and territorial issues kind of over Ukraine, and you also look at an adversary like China and the South China Sea? Yeah,
Taiwan is a really big issue. That's still something that the Biden administration has received some criticism over, that there doesn't seem to be a cohesive policy, foreign policy with China and with Russia. And then there's also Iran, which is getting closer and closer to a nuclear weapon, and he has to deal with that as well.
Well, in talking about cohesion and foreign policy, the president campaigned on bringing America back to the table on a global stage. Is there a sense that he really has had success in doing so almost 1 year into his presidency?
I think it's been spotty. We all remember the snafu over the submarine in Australia that ticked off our French allies so much. That was not a good step forward, and he has to sort of recapture the high ground in terms of foreign policy. This may be a chance for him to do it, but we'll see. I mean, after these discussions, you usually get readouts from both sides. Russia usually reads out before the U.S., so this may be just a battle of, interpretation of what actually happens on this call.
Right. Well, we can't forget about the disastrous withdrawal of U.S. troops from Afghanistan either, leaving so many allies there stranded. In terms of his domestic agenda, he's had some stumbling blocks as well. President Biden assured us that with his, 37 years experience as a parliamentarian, he would be able to snake his way through this difficult maze. It doesn't look so good now, Marty, but can we expect a Build Back Better package at the beginning of next year?
Well, I mean, if you listen to Vice President Harris and others, they are still determined to get some sort of Build Back Better bill through Congress. And it is still possible, it probably will be scaled back. And, you know, Bloomberg Opinion had a column the other day that said that Mitt Romney may actually be a key person in this debate. He advanced a bill to make the child credit permanent, which was supported by both sides, some in the GOP and the Democrats. So maybe that's an avenue they should explore to try and get something through.
Yeah, I always think of the line from the Clinton campaign, it's the economy, stupid. I can't remember if that was Jimmy Carville or his wife, Mary Matlin. But the economy is still humming along, Marty. You know, it's interesting because we talk with Mohammed Yunus from Gallup, and he points out that Congress and the president's ratings are bouncing along lows here. But as long as things are going well, how are they shaping up? How is their shot at success shaping up for the midterms?
Well, you know, I still think that if you look at the polling, inflation is certainly one of the key things on people's minds. Even if the economy is humming and the stock market is at near records, they're not associating that with Joe Biden. His poll numbers are pretty bad. Of course, it depends on what's going on this summer in terms of the midterms. But right now, it's not looking good for the Democrats.
And obviously, the Republicans are using inflation against him in the argument over the fiscal agenda. Thank you so much to Bloomberg's Marty Schenker for joining us this morning. And coming up later on this morning, Greg Valliere, AGF Investments Chief U.S. Policy Strategist, will be joining Matt and myself, as well as John Farrow. That's at 7 a.m. in New York, 12 p.m. in London. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin. Chinese AI giant SenseTime jumped on its trading debut in Hong Kong. The stock gained as much as 23% at one point. That was after a rocky IPO